Hey, what's going on, you guys? Bryan Nelson here. It is February 6th, 2023. We are starting to pick up momentum with tax season. We have been seeing clients getting refunds, which is always great. We want to make sure that as we file the tax return, IRS is receiving the information and they're processing refunds. So we are starting to see clients that are getting refunds sent by the IRS. So everything's looking good this year so far. One thing that I wanted to do, I thought it'd be kind of fun, is every once in a while we get a tax question that comes from a client. So I got one today. A client was asking, can I write off my RV? So in order to write off our RVs, you want to make sure you're going to the right tax accountant on this end, because you might have a lot of tax accountants that say you can't deduct that. But first thing that we want to look at when it comes to deductions is, would it be customary, ordinary, necessary, and even reasonable to take this as a business deduction? So in this case, a client wants to write off an RV. He does a lot of traveling for work. So does the IRS really care if if I have to travel? I'm in Utah, let's say I have to travel to Las Vegas, which is a couple hours away. Does the IRS really care if I take my car to Las Vegas? Do they care if I take my truck to Las Vegas? We want to make sure that it's customary and it's ordinary necessary. But the way I'm looking at this is, if I want to take my RV because I'm in need of a place to stay overnight, I can drive my Honda to Las Vegas. I can pay for a hotel, or should I just take my RV? Now I have a business purpose. I have to go there for work. So what I would look at is, should I write off the standard mileage rate, which is, I have it right here, 65.5 cents per mile in 2023? Or do I look at taking the actual expenses? So a lot of times when we think about buying a vehicle, we only think, can I write that vehicle off? But we also have the standard mileage rate to look at. So first step is going to see, what is my business use percentage? If I'm using the RV, is it maybe 10% personal and 90% personal, 10% business? If it's that way, then I would definitely say we're not going to write off the purchase price of the RV. We're just going to look at taking the standard mileage rate. So I would just look at the number of miles from Utah, number of miles to Las Vegas. We're going to do round trip, and then we're going to times it by 65.5 cents per mile. If I'm in an entity, I'm just going to reimburse myself for the use of the RV. If I'm now using the RV greater than 50% business use, then we can look at maybe doing some depreciation. So the higher that business use percentage is, the more we're going to look at using the depreciation. If not, we're going to use that standard mileage rate. So if we look at our actual expenses, I have a list right here. So we can look at depreciation and interest, maybe the lease payments, the insurance, gas, oil, car washes, tires, maintenance, repairs, licenses, tags, personal property tax, and maybe even parking and tolls. So it's not always a one size fits all when it comes to these deductions. We have to analyze things in a lot greater detail. But let's say we're using it 90% business and maybe 10% personal use. Then we would take, let's say we paid $100,000 for the RV, we'd only be able to write off 90% of it. So we can only write off that business use percentage. We can't write it all off. And most likely if we have an RV, there's going to be a few times that we're going to use it personally. So I would just make sure I'm keeping track of my total miles. So I like my clients to always get an odometer reading January 1, take an odometer reading December 31st. So that'll give us our total miles. And then we need to really allocate what was business use and what was personal use. Once we know that, we have a business use percentage. Okay. Or if we're not tracking mileage, maybe we look at number of days use. If we're using it 10 days for business, 1 day for personal, then we have a percentage there as well. So there's going to be different ways that we're going to use this. For the most part, I feel like if we're using a reasonable method to track our business use versus personal use, the IRS will be okay with it. But yeah, I don't think that we should be afraid of using an RV for a business deduction. Just want to make sure that we do everything that is up and up on the IRS's side. So I'm excited to see if we can help this client get an RV for his business use. And hopefully I get a lot more interesting questions through the tax season. I'd love to maybe shoot a few videos and answer some of these questions for you guys, just because it's fun to kind of see what's out there as far as business deductions. Anyway, it's Monday. We're back in the grind. So got a lot going on. Hopefully you guys are having a good tax season, having, no problems getting your tax documents. Let's get those tax returns filed. And hopefully we have some big refunds coming back. All right. Talk to you later, guys. Bye.